Good morning everyone, and welcome to the PivotBoss pre-market video for Friday, September 7th, 2018. Happy Friday everyone. I'm Frank Ochoa, also known as PivotBoss. Here is a look at the daily time frame of the ES. Last Friday we were looking for signs that perhaps we might see an early week pullback to begin the new month of September. So we put on a put spread here on the spiders on the ES about right here, and took that off yesterday near the lows of the day. A great move here. We could still see a little bit more pullback, but this lies within the framework of what we discussed here before, that price continues to trend up, and while we might see a pullback to begin September, this pivot range right here still remains the area that bulls will want to keep bid for a shot at returning price to highs. And so any failure to hold the midpoint of last month's range, which is this level here, the bottom of the pivot range, that level, failure to hold that level, will open up much more selling pressure. But any push to that level or shy of it could still be a buying opportunity overall. So we could be due to start turning around pretty soon after we see rejection. We haven't really seen a pattern of rejection yet. So again, we could still see more lows. We could drop into that 28.55s, but we want to see a pattern of rejection, something like this where it's clear that prices tried to go down and then rejected, and then that would spark some sort of bounce and short squeeze. So again, we're looking for some signs of strength here for perhaps a buying opportunity. Again, we are at the edge of the larger key range, which means this is also the area that if price fails to hold 78.5 over the longer term here, like for example, price can get down here for a few days, but if it can't stay above that level for long, that's where the bigger pullback occurs as well. Failure to hold above that level could end up dropping price 27.90 or 27 evens at the very least. So again, we're still in an uptrending market. The pullback still will likely be defended by bulls, but if there's any failure to be paid by those bulls, that's where things could get pretty hairy to the downside. So we'll keep an eye on this situation as it continues to develop. If you look at the NQ, this one has had more of a pullback than the ES over the last several days, especially as tech CEOs took to testifying in front of the Senate. Again, that type of pullback here was likely to occur given the trending behavior in the prior month. And now again, we are just below the previous month's midpoint. Again, that's a very important area. 70-40, 70-50, 70-45, that zone has been a very important area here to watch for some time now. So if bulls can't keep 70-40 bid, then again it opens up some downside. How far down do we go? The recent area of support here would take us at least 72.14 half on a short-term basis, and perhaps a little bit lower if it gets below that zone. But again, the trend has been intact. Look at this channel right here. It continues to remain intact. For the most part, we've been looking to defend off this zone each and every time it's happened. And even here, we were looking for a squeeze. We're there again. So do we see some sort of rejection that will get us looking higher, or does price fail to hold 74.40 and break the channel? Again, breaking the channel might get you back towards 7,200. Maybe even back as low as 7K. So again, something to watch for. But again, the primary idea is to look for signs of strength to buy it higher unless there's a failure. So keep that in mind. If we take a look at crude oil, this one has been a significant rejection since Tuesday's action. Remember, we talked about the major rejection here at the edge, the previous month's high at the 70 key level, above 71s. All of that has led to a swift pullback to 67. It hit 67 as a low yesterday. And the pattern of lower highs and lower lows remains. So could we see more weakness ahead? I mentioned before that rejecting this edge opens up a move back toward 66.30. So we still have a little bit more downside before we hit that area. Again, we hit 67 yesterday. There's probably at least a little bit more downside below that. And then the next key support level would be 64.30 down here. So I mentioned up here on Monday that this rejection suggests a move back toward this level at the very least. So that's what we're looking for here. And again, this market right here has been mostly sideways to down ever since it rejected here. The moves downward have been a little bit faster than some of these attempts to push price up. And so again, this is a really important zone here between 62, 75, call it 72s right here. That's a zone where we could continue to develop for a while here overall. But in terms of this narrow range, we got great boundaries here to watch, and so far still working down the boundary of that range. If we take a look now at gold futures, what you'll notice here is gold has continued to hold near these lows overall after the bounce. Continues to coil up like this. We have a key range off these lows here, and so the key range high is going to be 1237 and change. The low down here is 1167s, and then you have a midpoint right around 1200 and change. So again, that's the key level, and we're coiling right around the apex of that pattern at the moment. And at some point here we could see further development, but this is building the energy for the next key move. The market has not stopped really trending downward overall, and it's very close to seeing a stop run through 1190s that could be significant, at least a big retest of lows. So right now the market in gold coiling up and could see some sort of expansion soon, likely to the downside given the trend. But again, we'll keep an eye on both sides of this market. If we take a look at RTY, this is one I talked about before as being right at the edge of the key range. 1720, very important. I mentioned that there was a rejection tail here the previous session, 2 sessions ago, and that area was an attempt for bulls to try and defend. But I mentioned if there's any failure to hold 1720 and especially 1710, that could open up a move back toward the 1680 zone, which is about where we got the recent breakout to begin with. So again, this is very significant, closing below the mid from Tuesday's session, right now testing these lows. So again, we're still in an uptrending market, but if there's failure to hold that 1720 for too long, that's when we might open up more downside. So keep an eye on that situation. All right, that is it for now. Let's see how this plays out heading into the weekend. Good luck, trade well, and happy Friday.